All right. So the next topic, this will probably be one of the more maybe basically controversial ones. There's a lot of haters on what we're about to.
I hate myself for it. You can see I'm down
Yeah.
41 grand right here.
So, and there's a lot of people saying there's no way that this business will be worth anything. How they're basically a dumpster fire, yada yada. But is there some light at the end of the tunnel? And could a lot of people be wrong about this? What is this business? It is Intel, INTC as the ticker. If you look on investment threads on like Reddit or other analysts, a lot of people completely tearing this apart, saying that they're basically making all the wrong decisions. They fired a ton of people. The CEO is gone. Yada yada. They're not at like the forefront of all the chips, especially compared to like an Nvidia and stuff. Um, Obviously, they made some bad moves in the past, but there could be some light at the end of the tunnel. There's literally billions of dollars that is basically being invested in them by the government, or at least on paper. They're set to actually get that soon. They're trying to ram that money through so they can get that. And whole reason is there's a competitive advantage for the country as a whole if you get the chip making to move more towards in the US rather than being reliant on basically places that, might have some conflicts,
And
might have,
Intel's the only one that could do that.
yeah. So it's like, that's why the US is forking over billions of dollars. It's not just because, they like Intel, it's because, hey, they really want to move the chip manufacturing to the US. Because if anything were to happen in Taiwan, the world as a whole could basically be screwed. If 90 or I don't know the exact percent of chips made there, but the vast majority of chips, being made in Taiwan, if something went wrong there, you'd be talking something that'd be absolutely devastating to all the markets and to most of the countries out there. So it's just a smart move to diversify that and bring more of that here. And the government at least thinks that basically Intel is one of those guys that can do that. And if the government thinks that and they're moving billions of dollars there, it might be worth us basically paying a little bit of attention there. And it's not just that the government is funding them tons and tons of money, it's that actual stuff is happening. They're actually making a handful of innovations and a handful of moves now that are actually extremely positive. But if you look in the news, especially like a month or so back, like everything was negative, 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 driving the stock price down. But it could have the potential to really, really skyrocket, especially long term in the future. I mean, who knows what will happen in the next day, the next week, the next month, or months. But I'd say as a whole, the outlook beyond that short term is probably relatively positive. I mean, imagine if they get the chip making process fine tuned in the US. Imagine if they get over a bunch of the hurdles that they have right now and they're able to compete with a lot of the big players out there. I mean, they're worth a tiny, 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 tiny fraction of what a lot of those other guys
Their
are.
market cap is 80 billion right now.
Yeah.
So
So
think about that.
yeah, and that's
Nvidia's what, 3 trillion?
yeah, for those of you who are saying, well, that sounds really big. It's actually not relative to all the others. Now, what's nice about them being, relatively somewhat large to start with, but still a tiny fraction of the overall market, is that this is a big business. They're probably not about to like fail in like a day or two. They're probably not about to disappear. Um, pending a bunch of horrible decisions and whatnot. But yeah, I'd say the outlook could actually be not what a lot of people think. Could be substantially better. So what are you seeing with them? What makes you like Intel, Eric?
So I think you kind of were hinting at it there, which is we've got structural flow coming into Intel from the US government. It's really a military company at this point because without access to a chip foundry in the US, then we rely on Taiwan superconductor. So what happens there if we get some sort of tensions with China? So I think the impetus from the military U.S. government perspective is we need to get Intel back in line with its peers. Now, what happened in the last few years? Some of their chips were overheating. They put a lot of money into this foundry business where they're going to make fabs for chips in the U.S. I don't know if you guys know this, but most companies, NVIDIA, AMD, they're buying from Taiwan Superconductor. They're buying the fab, and then they do their lithography on the chip itself. So Intel is really uniquely positioned, and it's also the only one of these companies in this, in the mega cap kind of tech sector that's not wildly sort of overvalued and already pumped up. And like you laid out, there's reason for that, right? There is legit fear. But let's just look at some of the numbers in Trade Canary quick, and then we'll look at the options. So bullish strength 37, very weak, right? That's because it's been pulling back. So we're getting to the lower bound of that. Price to book, price of stock compared to the company value today is 0.8. So let's compare that with NVIDIA quick. I think that's like a worthwhile comparison. And I'll show you another reason we want to compare these guys with NVIDIA too. And actually, which gives us a hint that at the move that's probably coming to Intel in the not too distant future. So price to book, price of stock compared to the company value on NVIDIA is 48, right? So that means the price of the stock of NVIDIA is 48 times the company value. It's 32 times the price of their sales, right? So Intel, 0.8. That means the price of the stock is 20% lower than the book value of the company. And as far as price to sales, 1.5. So the price of the stock is 1.5 price to sales. Now look, big ugly number here. Like I said, they've been putting all of this money into R&D and into creating a US-based fab. So they've got big expenses, right? And it's destroyed their balance sheet alongside some legit issues with their chips. Their 1300 and 1400 series were overheating in laptops and on the desktop, especially for gamers. So that kind of gave them a bit of a bad reputation. People started buying AMD instead. But regardless of that, it doesn't mean Intel's going down. They're just in a down year or a down couple of years. And in fact, let's look at AMD quick. That was one of my great trades from 2016 to 2017 range. So let's look at AMD. The exact same sort of scenario happened to these guys where you can see early 2000s, these guys were dominating. I built many PCs with AMD chips, and then they went way out of favor. So here's kind of what's happening with Intel right now. They're getting way out of favor. Now, AMD had significantly more struggle than Intel did. But AMD hired a new CEO, I think in 2016, and talk about a parallel with Intel. Intel just let go of Pat Gelsinger, their CEO. Brilliant man, nothing against him. I really liked him. He's an engineer, so he knew how to speak to what the company does. But AMD brought in their new CEO, and she just turned it around on almost every level. So Intel is having a very similar setup where they're out of favor. They're out of favor with the gamers, and they're still very competitive. They have a lot of market share on the server side. Go into Costco, go into any store, you're going to see Intel logos everywhere in the desktop and laptop area, right? But regardless, the market has sensed that there's some competition, and that's basically pushed the price down. Now, has this fully played out yet? Well, I kind of thought it had played out and finished its down move here, but we've got another move down into this 18 to 20 handle, and it's lining up perfectly with their price back in 2010, 2011. So kind of go back to Trade Canary here on this to button up the point. You're buying a very cheap stock here. Is Intel going out of business? Absolutely not. The government's behind them. And now we're starting to get positive news flow. So look at this. So this is from 1 day ago from the time we're shooting this video. Intel Arc B580 graphics card is selling out. So they just released this card that competes with the NVIDIA 4060 Ti. And they beat it handily for almost $200 less. So this is the first time since 2020 that we've had like a cheap mid-range card, and they're beating NVIDIA, so they're already selling out. So you're getting ahead of something that's coming here. Now, like I said right at the beginning of this video, I'm down a good amount on Intel, not a good amount compared to my overall position, but I am down on it. And so how am I playing that now? Well, I keep accumulating shares. Let's look at the option chain quick here in Trade Canary, and we can maybe glean out some info. So here is 180 days to expiration. You can see it's mostly weighted towards the calls. There is 37 million at the 25 strike. That's expiring sometime in the next 180 days. So let's see if we can find where some of that volume is, some of that open interest is inside of Thinkorswim. So let's go to, okay, you know what? I had it open right there. Okay, so there's the 25 strike. You can see there's 20,000 open interest. It's going for 51 cents, so that's $51 per contract right now, right? So let's just play this out in our mind. So if we're going to do some shorter dated calls on this, in this case, 21st of February, and we're going to $25. Okay, so sorry about that. Let's go back to the chart. What am I doing here? There we go. So let's think about the possibility, the probability of Intel getting to 25 by February. And you can kind of just draw this out on the chart. So February 21st is right here, and here's 25. So we need to get to the top of the range. That's a little tight in my mind, but okay, let's say we do that. Sorry, let's go back to the option chain again. So we're paying 51 cents. We're $5 out of the money. Right now, right at the money at 20 bucks is $1.71. So if we get these at 51 cents, and the move does play out by late February to 25, which I actually don't think it's certainly not impossible. In fact, there's a lot of open interest here, right? Which suggests somebody thinks it's possible. But then let's just use the corollary here of the at the money. So $1.71. So we're getting a 3x on these calls if we play it that way. Now, that's a little risky in my thinking. What I would prefer to do, what I love to do, and I'll repeat it again, is I want to pay as little as possible for time. The way you can get cheap time in a contract, in a call or a put, is buying that call, we'll use the call example, when the stock is down for the day, especially on a nice move down like this. Think about how that compressed the value of the options, the calls, right? Because all of a sudden it looks like Intel's going into the abyss. Well, what did it actually do? It just came back and tested out this bottoming pattern from the gap down that we got a month ago. So to sum it up then, I would be buying calls further out than February and do it on a time period like this when the stock is correcting, because then you can get time really cheap. So let's say we go out to 16th of January. What are those going for? So the 25 strike call is 260. So it's 5 times more expensive than the February 25 strike, right? I'll gladly pay that though, especially since it's compressed. And I'll show you something else here
Now,
too.
just to clarify, you are actually talking about a year out.
We are talking a year out.
Yeah. So just in case anyone's like, oh, you mean you mean like the 26th of January? No, he's basically talking about.
Yeah, sorry, I wasn't clear about
26th.
that. So we're talking 16th of January, 26th. Thank you, Brian. Yes, you should pay a lot more for the strike that's in a couple weeks here. No, so okay, let's go up to January 26th. Okay, now people say you can't chart an option, and okay, I agree. There's not a great point in this, but we can use the chart. I'm going to send this to the chart here. This strike. So 25 strike, Jan 2026. We can still look at what these traded at before. So look at this. We can see the stock pattern, right? Remember, just think about that bottoming out pattern I showed you, and look how the price of this contract is tracking with the Intel common stock chart. And look down here. This blue line is the open interest. Open interest is how many contracts are open on this strike, right? You can tell people are buying this up. They're gobbling it up. So this is kind of a magic setup in my mind. You're not paying very much. I mean, okay, $2.60, so that's $260 per call. Yeah, I usually do 10 lots, right? So I'm at $2,600. But now let's just theorize. or let's just look at some possibility. Let me go back to Intel here. Okay, so let's say we're well in the money by then, and I think we will be. We'll be over 30 for sure. Unless the wider market in 2025 has just a choppy bad year, I think we're going to be well over 30 in Intel. So then that puts us in the money, right? And in an up move. So the opposite of that compression on the call price is going to happen. It's going to start expanding. So that $2.60, my 2,600 in, that could easily 10x. Easily. Not to mention, if it's well in the money, then it's not just a matter of pricing the option at sort of the momentum in the stock and people paying attention to it. It also has just a built-in value based upon how far in the money it is. So I'm paying 260 here, right? So that means I'm at 27 bucks, right? The 25 strike plus I'm paying the 260. And then you can just start adding. If you got 10 lot, right? 10 contracts, you do 10 times 100, so 1,000, and that's every dollar above in the money. It's going to be $1,000 for that position. That's probably a little confusing. I'm going to leave that there. But my point is, buy it when it's compressed, ride it on the momentum, and then when we go in the money, then all of a sudden you're going to start just seeing the price of the contract also get the price difference between the stock and the strike added into that value as well. So it's a really sweet setup.
Yeah. So what's nice with this is that it's one of those opportunities where, hey, you have a chance just basically play it by straight up accumulating stocks, especially on down days, and it's also one that, hey, could be lucrative possibly on the option side, and again, who knows what will happen in the short term. If you're talking weeks or even a month or two out, very hard to say on that. Long term, really, really like the outlook of that. Of course, it's just our opinion, but you can use a tool like Trade Canary. Look at the stats, do some research on it, pull up the news feeds on it, which you have right there, and it's
so
all.
This is really valuable too. You can see where people are positioning out a half a year, and then you can whittle this down and see where is all the big money and what strike are they at. And so this is basically the open interest and how much they paid on these trades, right? So the big one right now is 25 in the next 6 months. The other thing you can do is use the unusual option scanner and just monitor this. This is going to find you those setups where a lot of money starts flowing into them, and find it on the day that it happens, and maybe pick up one contract and watch it, right? Because if the stock starts moving down, you might be able to add to it for even cheaper. And just
and if if you like information like this, you like to see like the in-depth analysis of stuff, you like to see more info on what's some of our favorite stocks and the picks are, feel free to check out the link that you see right now for Trade Canary, where you can not only get our favorite picks and analyses, you can also get automatic insider buying and selling alerts. You can get on usual options activity. You can get a breakdown of the fundamentals and technicals of all these businesses, and sector trading and all that stuff. I mean, all sorts of really fun, neat stuff that you have all in one spot at one time, as well as videos and stuff like this where we're literally breaking down and telling you what we like, what we don't like, and what I love about it is like you don't have to take our word on anything. In fact, I actually encourage you not to. I'm saying, you want to do your own research, but a lot of people, if you tell them, hey, do your own research on, essentially business A or business B or business X, most people don't know what to do. It's very, complicated, especially if they're newer, even if they're advanced. You don't have everything in front of you. That's what I love about Trade Canary. It has all the information that you kind of need right there, including, like the news and stuff you can go into and see everything right there. So you can quickly and easily do your own research. Or if you just want to get, like, let's say, alerts to some of the largest, maybe insider buys or unusual options activity, you can get those alerts and see all that right there. And then, hey, if there's an insider that, let's say, is buying millions of dollars worth of stock, and it's, let's say, half or more of his total take on it, you maybe want to pay attention and see why. And you can easily look at the company through the software then at the same time and see, hey, does this look to be, maybe a good opportunity? Is there a reason why this guy is buying so much right now? Yada yada. So, again, encourage you to check it out. Feel free to check that link out so you can do your own research and also get additional tips on and additional picks and stuff and in-depth analyses of this is essentially other stocks that might fit similar criteria right here, where they might be kind of ignored but have maybe a pretty good upside potential there.
That's right.